Do you know what the key retirement risks are and how a retirement annuity can help to reduce, if not eliminate, these key retirement risks? Well, by the end of this video, I'll give you the facts so that you can make an informed decision about whether a retirement annuity is an essential part of your retirement income planning. Given the importance of this topic, I'm going to dedicate several videos to talk about these key retirement risks. I want you to get familiar with them. I am a firm believer that you cannot fix a problem unless you know what the problem is. And by the way, market risk is only one of these key retirement risks. Hi, my name is Darlene Hartman, and I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit the notification bell so that you can receive notices every time I post a new video. So before I begin, I want to recap about the annuity benefits. So first thing we talked about was principal protection. The fact that the amount of money that you put into that annuity contract, the insurance company is liable for returning that money to you during retirement. You also get that guaranteed income paycheck, money that you cannot outlive. We also briefly talked about a legacy for a beneficiary. One of the things that I forgot to mention about setting up a legacy in an annuity contract is the fact by doing that, you are ensuring that the insurance company receives zero of your money. Also, we talked about a confinement care rider, which helps with those long-term care benefits, and I will spend more time talking to you about that in a later video. The big one that I think I've been repeating over and over and over again is market downturns. The fact that even in the midst of a market downturns, you're still receiving that guaranteed income paycheck month after month after month. Not only that, the amount of your paycheck is not dependent on what's going on in the market. It is dependent on what was agreed on in that annuity contract. So speaking of market downturns, let's start to talk about market risk. So admit it, we all love market risk until there's a market downturn. That's when our retirement portfolio takes a pretty significant hit, and who knows how many years it takes to recoup that. And just think about it, if you're in retirement in the midst of market downturns and you need those retirement assets to pay your monthly expenses, you're selling your investments at a lower price, which means you need to sell more investments to cover your monthly expenses. So what does that mean with respect to a retirement annuity? So if you have a retirement annuity set up to pay guaranteed income that covers your monthly expenses, then you can leave your retirement assets alone. You can let them recover from that market downturns. But don't get me wrong, market risk is not all bad. It actually gives you growth that a retirement annuity can't give you. So a retirement annuity, if the interest for a fixed annuity, I should say, if the interest rate is tied to the 10-year treasury note, and that's less than 1% right now, you're going to get more growth potential from the market as long as the market is doing well. Also, bear in mind that experts have been writing numerous articles lately about the fact that people in retirement are happier if they have a retirement annuity in their portfolio. I mean, who wouldn't be happier if they're getting those guaranteed income paychecks, even in the midst of market downturns? Leave me a comment in the section below and let me know if your retirement has been affected by market downturns. If you're enjoying this video, be sure to subscribe to my YouTube channel and hit the notification bell so that you can receive notices when I post a new video. So the next risk that I want to discuss is inflation risk. So the old adage for inflation risk is too much money chasing too few goods. So let me give you a perfect example of that. Let's think about the COVID pandemic when it started. So people were going out and hoarding, buying lots of toilet paper and hand sanitizer, and then getting online and selling it at a premium price. So if you really needed toilet paper and the only way you could get it was to buy it from a hoarder, then you're going to be paying a premium for that toilet paper. Who would have ever thought, right? But that explains inflation. Just so you know, inflation is a long-term risk. In the short term right now, we're not dealing with inflation risk, and I'll get back to that in a minute. But I want to tell you how a retirement annuity can help you with respect to inflation risk. So you can actually purchase an inflation rider on a fixed annuity to help protect you from inflation. But bear in mind that your payments early on are going to be a lot smaller than if you didn't have that inflation rider. They will grow with time to help you cover the cost of inflation. Another option with respect to retirement annuities is to ladder those annuities. So instead of a vertical ladder here, it's going to be kind of a vertical horizontal, where you're going to have annuities that provide you that guaranteed income paycheck at different dates, so that you're getting more guaranteed income as you get older to cover that cost of inflation. I want you to also keep in mind there is a third option with respect to inflation. And I already mentioned that market risk, if it works in your favor, provides you a lot of growth, and that can actually help protect you too with inflation. So you heard me mention that right now, in the short term, we're not dealing with inflation risk. We're actually dealing with deflation risk, which is the opposite of inflation risk. So keep in mind the federal government is putting all this money in the economy to help stimulate the economy. By doing that, they've reduced the Fed rate to almost near zero to help stimulate the economy, which is causing us to be in a deflationary period. We're expecting to be in that period probably till about 2022. So the Fed has actually said they don't intend to raise the rates until about 2022. And then it's that crystal ball again. Remember, I don't have that crystal ball, so I can't predict when the Fed's going to start increasing that interest rate. The success in your retirement is defined by two things. First, how much guaranteed income do you have in your retirement portfolio? Second, have you taken these key retirement risks off the table? If you have not secured guaranteed lifetime income and or taken these key retirement risks off the table, and you want to purchase a retirement annuity, click the link below to become my client. Also, if you like this video, give me a thumbs up. Be sure to forward to your families and friends. Subscribe to my YouTube channel and hit the notification bell so that you can be notified anytime I post new videos. Let's get the conversation started on how you can live your best retirement without outliving your money.